Now, my friends, so just walking the puppies. There they are. Look at those puppies. Hey, boys, you want to say hello? Hey. All right, so the economic news is bad across the board. Manufacturing indexes are down, housing sales are down, PPI is through the roof, that's producer price index. It's gloomy out there. And yet, why is the stock market going up? It continues to go up. Why is that? Well, it's pretty simple. Because the days of massive raising of interest rates are going to be coming to a quick halt. Now, and this is don't fight the Fed. So my man Carl emailed me and said, can you explain what don't fight the Fed means? It just as the Fed is raising, stocks usually go down because bonds become more attractive. That's all that means. And so a couple things. Bonds will go down. The already issued bonds, because newly issued bonds are newly issued at a higher coupon or more attractive than older bonds at a lower coupon. I don't want to get too deep in that here. I know that's kind of confusing, but I've done videos on that. We'll do other ones again. But so don't fight the Fed just means, well, wait until the Fed stops raising before you go on a massive buying streak. I've never understood people actually just have all this cash to buy with. I never understood that. Or people, I'm buying the dips. What does that mean? That means you have to have cash in order to buy the dips. Where's that cash come from? That means you weren't invested. And if there's one thing we've learned, it's not timing the market that works, but time in the market. What? Can you just guys not get me tied up here? Oh boy. Am I gonna have to? Oh, Finn. Now I'm all wrapped up in these guys. Okay, there we go. There you go. All right. Whew, what a nightmare. All right. So time in the market is where the money's made, not timing the market. All right. Anyway, so what's going to happen here is now that the Fed is recognizing, and even Powell said, raising interest rates isn't going to do anything when it comes to slowing the price increases of gas and food. You guys want to see something crazy? Can you see that tree right there? Look at that. That is nuts. Look at that. You want to see that? Tell me that's not crazy. You want to stick your hand in there? I don't. Man, I bet there's some nasty monsters in there just waiting to eat your old buddy Josh. So basically what's happening is now that we have massive contraction coming down the pike, I mean, who is the first guy telling you we're already in a recession? This guy. And I would point to myself, except I got two dogs on leashes, so I can't. This guy right here. We're already in massive recession, we're already in recession. Contraction's coming. Without question, it's coming. And even Powell said, hey, raising the rates isn't going to do anything. Because the reason that we're paying so much is because of gas and food, and interest rates aren't the cause of that. Oh boy, I got to pick up Pop's poopy. This is like the old days, man, of me picking up the poops. Let's take a look. That's BF before Finney. All right, hold on a second. Got to pick up the poops. Pick up the poops. We're gonna do this with. Got to pick up the poops. Oh, hold on, Finn. Oh boy, Finn doesn't go poop out here. Only Pablo does. Finn likes to go poop in the backyard. All right, come on, baby cakes. Oh, look at that guy. Yep, he just likes to sniff at McGee. Oh, Pablo wants me to pick him up. All right, so come on. So anyway, they're going to. So the Fed is going to have to raise rates one more time, just to save face. Then they're going to stop raising rates, and then they're going to say now, why are they going to stop raising rates? Because they're going to say that raising the rates are what caused the contraction, just like they anticipated. That stopped inflation. We whipped inflation now because of federal raising the rates. It's silly, but it's what they're going to say. And of course, mind-bogglingly numbed robots will go along with it. But now we got to deal with the recession. How do we deal with the recession? We lower the rates. So come September, they'll probably wait till after the election, just so they doesn't look that blindingly obvious. But come 2023, they're going to lower the rates to deal with what is now a recession. Anyway, so the point being is don't fight the Fed. The stocks like it when the Fed has cheap money policies. The stock market does. And cheap money policy doesn't mean it always has to be low interest rates. It just has to be lower than previous. That's what it means. I mean, I was reading some of my newspapers.com subscriptions about in the 1980s and trying to gather information from my book on this. And it's just very interesting because they were saying cheap money back then was an interest rate of Fed funds rate of what, 10 or whatever it was, comparatively speaking, to where it ended up being at 20%. It's kind of funny. And Fed funds rate now is what, 2.25, if even now, I don't even know what's that. And the point being is, so the Fed is going to say, the market sees a recession coming, a contraction coming. The market says, oh, that means they're going to stop raising, which means we're going to go back to cheap money. You're seeing the bond market jumping up big time. People are buying bonds again because they know that the Fed raising days are behind us, and they're going to start leveling off, and then they're going to start dropping them again, which means when they drop interest rates, bonds issued today would be worth more. I know it's such a clown show, but it is what it is. Bad economic data is good for the markets. I know it makes sense, doesn't it? Short term is good for the markets. And again, another reason to be bullish, because the Fed is telegraphing that's exactly what they're going to do. They're going to stop raising. Look, anything could happen, but you just see this a mile away. Why is the bad economic data leading to good market? Oh boy, there's a dog over there jumping on the window about to break through it. I'll never forget this. When I first started out, I think it was in 94, 93, and GM just laid off a whole bunch of people. I said, man, that's going to kill the stock. And then literally the stock jumped. I said, what? And my mom told me, she goes, maybe it's in 89, I can't remember, 90, something like that. She goes, yeah, because basically that means GM has less employees to pay, and labor costs are the biggest hit to earnings. So getting rid of employees is good for short-term boost for earnings, which makes the stock look more valuable because the earnings will be good relative to prices, and PE ratio will be lower. And as such, the bad news was good for the stock. It makes no sense. Maybe for the short term, for the long term, it's definitely not. Just look at GM stock now. But hope this helps. Love to hear your thoughts. We'll see you.